Okay, welcome back to the Fail Breakdown channel, everyone. It is Monday, the 12th of January, 2026, and we're going to talk through. I've got IMMW with me again today, and we're going to talk through mainly the fail breakdown of 69.55 that happened in the London session, but there was opportunities to jump on board if you got up early enough. I'm also going to touch on real quick a loss I took last night on the 69.77 and perhaps why that was an invalid entry that I took there. So I'm going to rattle through those couple of trades. As always, we're not experts. I'm speaking from my current level of ignorance, and I'm just doing our best to relay the methodology taught by Adam Mancini. So absolutely go subscribe to his newsletter. That is worth every single penny for sure. Okay, with that, let's bring the chart in. So here I've got the 4-hour on the left and the 15-minute on the right. So real quick, I'm just going to look at this little level here. So we at the 69.77, showing 76 on my chart here. But so off the open last night, Sunday evening, we pushed up a little higher. And then failed below the first support down here at 02, and it looked like it was going to recover here. I was kind of watching this level initially, but it failed to do so, didn't trigger an entry, and then we lost the important 90 level, and that was kind of two things there. Obviously this was a major support, but we started an elevator down sell from there. You can see by the kind of the red bar that highlights those steep sells on my chart, and then this also triggered like the initial bull case here on the loss of 69.90. So those were kind of the first points to notice as we started the sell last night. And so I'm going to zoom in to a 3-minute chart just to show the action here around 69.77 and bring up some kind of things I marked on the chart as a bit of a post-game review or analysis. So let me bring these in real quick and zoom in. I'm going to full screen this guy so we can see. So let's get this a bit bigger. Okay, so initially, my first thoughts were, yes, we're getting a nice scary flush, nice scary sell down, elevated down, and we just flushed the 77 level by just under 2 points, and initially like bounced straight up 5 points. So I was first watching kind of the danger zone. Were we going to hold 5 points above the danger zone? And it did hold for a few minutes, but given it was an evening session, I was giving that a lot more time than a regular trading session. So there wasn't really an entry triggered there for me, but had it held for maybe 10 or 15 minutes, then that was a possible entry, but it didn't. It came back, flushed through the level again by 4.5 points this time, and then started the process of recovering. And I was reading this whole kind of swing down, that black arrow is type 2 acceptance. And I think had we recovered at this point right here properly, that would have been a decent entry to long. But instead what happened, it really failed to recover there, and we lost these 72 lows, that 4.5 point those flush. We lost those and then dipped to about 9.75 points below here. And so in doing so, we'd made a significantly lower low at that point. So I think the part I really missed in was waiting for another swing of acceptance on the recovery, because we'd just been making lower lows each time. And by this point, we were almost 10 points below the low. We lift straight back up through the level, and I got in here right around 78, I think. Ran up a couple of points before ultimately just fading and dropping back through the level. So my main takeaway from this, firstly, the initial bear case had triggered, so that was one caution. But really with the deeper flush here. I needed to wait for a second cycle of acceptance, either type 1 or type 2 on this reclaim, because we'd gone from initially 2 to 5 to 10 points lower. I think that needed another sell attempt at the level there, waiting for sellers to reveal their hand. Had I waited for this, sellers revealing their hand, then not recovering, that might have avoided the trade for me and prevented me from taking that loss or taking that lesson. But no, not to worry. I'll just, take that on the chin, learn what I can from it. Anything you wanted to add to that one?
Yeah, so yeah, I mean I was watching last night evening looking for potential entries. Obviously the first thing I was watching was that 69.98 little low we had. And I was also cognizant of the fact that if that were to kind of fail and we were to fail 69.90, that area, that would trigger the first kind of bear case, and that did trigger. And so whenever that does trigger, I kind of become a little extra patient and a little extra careful with kind of, knowing that in the interim, sellers are going to be in control. So when we got down to 69.77, I saw we put a quick shallow sweep of it for 2 points. I was kind of watching to see acceptance. We didn't get any. We then flushed it down to 67 and then came back up. And so at that point, again, I was looking for acceptance after, a much deeper sweep there. And we didn't get it again, kind of flushed back down to 69.70 or so. And, if we were to come back up there and
Mm-hmm.
have some nice type 1 acceptance, I would have taken the long, but we ultimately never got it. So from my vantage point, there was just nothing for me to trigger an entry, which meant I would just have to wait for the morning.
Yeah, great. Wish I'd done that too. All right, thanks for that. Let's not dwell anymore on this one. Let's move on to 69.55. So I'm going to just swing back to 15-minute chart, hide all of those. Well, looks like they've gone anyway. So, all right, so this is one of those where, kind of expecting to read in the newsletter when I woke up and checked price at 7 a.m. I noticed we'd put in a failed breakdown of 69.55, but price hadn't gone very far. That's kind of what I'm expecting to read in the newsletter tonight. And that's where was certainly what I was thinking when I first checked price this morning. So I kind of woke up right around 5:45 my time, which is Central Time. So for me, the first thing I noticed was the little bounce at 69.60 and then the failed breakdown of the prior day low. And this was really the first sort of high quality level that I think I've traded all year long. As in, most of the trades I've taken have been much higher up in the trade plan so far this year. So that certainly caught my attention as being a high quality level to trade. And we'd flush that quite nicely. Not a massive flush, just 5 points, but an adequate shallow flush. Put in that little acceptance swing and then lift it back up. And so for me, I was looking then at this kind of intermediate low at 60, and as we were dipping back towards that, I just decided that right around 60 we weren't very far off the low, so the risk and reward was pretty good. Only a 10-point structural stop plus a little bit of margin, so maybe 13-14 point stop on that one. And with this pretty significant powerful failed breakdown behind us, I was happy to jump in at the 60. There was a small little bit of overhead resistance, but we'd already tested that. So once at 64, so I felt like if we could get back up there, we would, we might lift straight through that and recover. And obviously that has been a pretty significant level from the previous days and was again in the overnight session. So yeah, that's how I traded it. Nothing more complicated than that. I think you did something similar. How did you see things when you woke up?
Yeah, so for people that woke up a little later, like I did, I woke up at about 7:30, 7:40-ish when I checked the charts. So first thing right in my head, what I'm looking at, I see price a little higher than you. It's at 69.64, 69.65 at the time. And at this point, what I see is we have an active failed breakdown, right? A nice active failed breakdown of a really high quality area of 69.55, 69.56 or so. So at this point, the first thing I'm looking to do is, if I can, is just wake up and add along, right? The only time where, you don't want to particularly do that is if you wake up and we've already completed the major structural back tests, right? So in this case, there were two structural back tests, right, that Price would have to complete off the failed breakdown. The first one would be 69.77, right? That was the kind of area Tim was watching last night that he outlined. And then the second one would be 69.90. So as long as we haven't touched either one of those two, and you can still, wake up and just add the long, even though it's a little higher. So in this case, I added it around 64 or so because I felt, fine knowing that, we still had some upside to go to hit those targets. So even though, technically I'm adding about 10 points off the failed breakdown, that is completely fine. The failed breakdown is active. We have major structural back tests to complete, so you can just hop in. Now, if I had woken up and price had already hit 69.77 or already had hit 69.90, then that's a little bit of a bigger issue. And then, you kind of just have to wait for the next setup because all the targets have essentially been hit already off the failed breakdown. But if we haven't completed any structural back tests, then oftentimes you quite literally can just wake up. And if there's an active failed breakdown, you can put on a long because, again, you have to then assume that buyers have the edge here. They've put in the failed breakdown, dips will be bought, and they're going to attempt to at least go ahead and clear, to at least test the structural back tests. And that's kind of something we highlighted in the pre-market stream today as well, right? That sellers would have to either react at 69.77 or 69.90 for another leg down. And, there just was no reaction at any point. It was kind of easy going for buyers to clear that. So that's kind of how I approach those. I think sometimes, it still can get a little confusing when you wake up to an overnight failed breakdown of kind of what to do. Do I hop in? Do I not hop in? So I think the best thing to kind of think about that is just to find out what the structural back test points are. And if price hasn't hit any of those, then I think you can just, go ahead and take that long. But if it has hit it and it's quite a ways off the lows, then at that point you probably just want to wait for the next setup as that project, quote unquote, has been completed.
Yeah, and we are in still in that buy the dip regime as well. So that's key as well. Just understanding the context. Yeah, it looks like pretty dramatic sell down from the highs on Sunday open. What's it? About 60, 70 points, something like that.
Yeah, that also definitely helps add to the quality there as well. That we've essentially already sold down 65s, and that's close to a typical elevator sell down in ES. So we're already hitting that close to 70-point mark. So that also adds quality. Again, that level itself was essentially a prior day low that was very high quality. So
Yeah, let's
overall,
just touch on
it's
that
very
real quick.
nice.
I've zoomed out a little bit, but the quality of this low is multifaceted. I would say we have kind of the extended trading hours low, which was 54.50, I think, and then two lows. And I'm looking back at the Friday session, two lows here from around the London Open, and then the big RTH low as well. So there was a lot going on around that 69.55, making this pretty A plus level to be trading. I guess from just playing devil's advocate a little bit, the only thing perhaps I didn't like on the reclaim was that this was maybe a little bit choppy on the reclaim, but need to keep in mind that that's during the London session. Volatility's not as high. volume's lower, obviously, so that's somewhat to be expected during the overnight. Um, but certainly not enough on its own to keep you out of that trade. But had this kind of action during a regular trading session is a bit less appealing for me. You like to see those swings, and I'm just talking about kind of the action right around the 55 to 60 level. It wasn't like it didn't really have that beach ball bounce straight back feel to it. Well, maybe there's a little bit of it in here, but
Yeah, there was some good acceptance of it though. Like looking back at when it happened live,
mm-hmm.
for anyone that was trading that overnight or is in a different time zone, we did get some nice type one acceptance off of it, off of the dip. We rejected it around four, like just a little after 4 a.m. or so, dipped back underneath by a couple points and then returned to it. So, if anyone was trading it live, I think anytime after 4:50, 5 a.m. was a fine time to long. And then, you just kind of sit and wait for the first profit target to hit, which probably took about a couple of hours. But yeah, definitely some nice acceptance there if anyone was watching it in real time. Obviously, we have the benefit of, we didn't really need to watch acceptance in this example because by the time we woke up, it already had been accepted and had floated up quite nicely off of the lows. So, London had kind of already done our job of acceptance for us.
Yeah, and I think there's a case for both types in there, and that's often the way we typically talk. Say, oh, it's either type one or it's type two, but you're often getting a blend of both. So initially some type one, then we pushed up through the level, lost it again. Nice thing about when we lost it again, we didn't threaten the flush low down at 69.50. So pretty easy entry, I would say here, right around maybe 4:50 Eastern time. After you've had both types of acceptance, but you could have equally gotten in here shortly after 4 a.m. too. Okay, I think that's probably enough on that one. Any closing
Yeah.
comments?
Yeah, I mean, I think today's lesson of the day would just probably be, how to approach failed breakdowns when you kind of wake up to an overnight failed breakdown already active. And I think we touched a little bit on what to
Yeah,
do in those cases. Look for what the major structural back tests are. If we haven't hit them and price looks good, hop in. And if we've already hit them and we're quite a bit off the lows, then just wait for the next setup. So that's, I think, kind of the way to approach it. And it'll come in handy because they do happen quite a bit where we do get overnight field breakdowns. So
yeah,
at least now we for the next time that happens how to approach those.
right. I've been reading that quite a bit recently in the newsletter. There's
Yeah.
7 a.m. entries and 10 points off the low. It's not so far, obviously.
It's not.
It,
Yeah.
we like to get in as close as you can, um, but in the grand scheme of things, it's not miles
Yeah,
off the
and
mark.
honestly, right, like I think a lot of times Adam even talks about why higher is honestly technically a safer entry because when you enter higher, right, there's already been confirmation that the failed breakdown is active. Sometimes if you enter extremely close to low, there it's still up for debate whether or not the failed breakdown is triggered, right? When you enter, for example, and obviously you don't want to be entering 10 points above the low all the time, but just in this example, right? Like you already know the failed breakdown is active. There's already proof. It's not like it's happening in real time and you're like, is it active? Is it not? I don't know, how to feel about this. In this example, it's like, hey, it's active, and now you're just hopping in on an active failed breakdown looking for a level to level move.
Yeah, and I think it's the key with the deeper sell as well. Um, okay, great. Well, with that, I think that's it for today. Not much else going to happen, I don't think. Certainly not from my standpoint. So we'll catch everyone in the Discord and see you in the pre-market for tomorrow. Hopefully we get some more structure develop over here and give us some setups. But we do have, is it CPI tomorrow, I think, or something on the news tomorrow that could be significant. So we might just be building some structure here until that news event and get some volatility when that drops. Okay, thanks everyone. We'll catch you in the Discord. Bye for now.